Analysts say the market seems to be still firm, but the rate of increase is beginning to slow down. Finally touched the 4,000 mark of Friday. It is still holding on to the bull today. What's your outlook for the week? Is the rally sustainable?
Yes, the rally is sustainable up to a particular point of view, because when you look at how things have been, for the first time in 2 years, this first quarter of 2010 has really been good for many businesses. And even, I mean, it's indicative with how many companies have been releasing the results, their first quarter results, the profits. Though profits have been down, growth has been significant. When you're looking at stocks that are actually driving the market, you're looking at Safaricom, you're looking at Kenya Commercial Bank, Equity, KenKobil. These are stocks that actually, in terms of market share, in terms of growth at the market, it's been really significant and be able to pull up the market.
Now, a report that was released today by the Standard Bank in South Africa about the Kenyan economy, interestingly titled "Good Things Come to Those That Wait." It says Kenya's economy is likely to grow by 3.9% in 2010. Do you share in that opinion, and do you see the markets reflecting that growth?
Yes and no. I believe the sentiments are true as far as being patient as far as the stock market is concerned, because the market at the moment is a long-term investment for people. So if you're putting in your money, you have to wait for at least a minimum of 2 quarters. However, the growth projections are true, but based on, pegged on particular terms and conditions that actually must be met by economic indicators. We're looking at our political situation. We're looking at how the country is going to handle the referendum for the new constitution and things like that. We're looking at how the government is actually going to fully implement the stimulus package. We're going to look at how the government is going to handle the aspects of energy, the aspects of inflation. I know the aspect of inflation was actually changed. How to track it was actually changed to reflect single digits, but at the end of the day, it doesn't really change how things are on the ground.
Now, the same report also gives a projection of annual average inflation at 7.9%. Other analysts that we've spoken to earlier say it will fall between 6 and 7%. That's slightly lower than the Standard Bank average. What do you expect the impact that this would likely have on the fixed income front?
I think one, on the front of statistics, the first quarter has been very good on companies, but has it been good on consumers? Because I think the consumer index at the end of the day will actually be able to define how the inflation is at the end of the day. And when you're looking at various factors that are actually able to shoot up basic commodity prices, you're looking at food, you're looking at flour, sugar, and things like that. The bottom line is actually politics and how we handle the constitution drive for this country. That's the biggest challenge. And then the stimulus package that's supposed to drive various sectors in the economy, like agriculture, infrastructure, and ICT. So if the stimulus package can actually be handled well, and we can have a new constitution by end of the second quarter, then I believe the inflation projections can actually be lower.
Let's just turn our focus to the financials, which have been a crowd puller lately. Analysts say the sector grew at 8.9% in the third quarter of 2009 from 4.4% in quarter two. What's your outlook for the sector going forward, and are you optimistic on financial stocks?
It's actually been the flagship of the economy in terms of when you're looking at the stock market. The finance sector, all companies, the finance sector, looking at the banks, the results have been impressive in terms of the growth of the stock market, the growth in terms of profits, bottom line, customer deposits, and things like that. We're seeing the finance sector actually leading other sectors, and we're able to see, because given how the country has been in the last 2 years, finances, mostly banks and microfinance institutions, have been able to take advantage of the problems that the country has been going through to be able to pull out. So yes, I expect the finance sector to actually keep leading, being the flagship of the economy, and hoping for better things to come.
Other news just in, KenKobil has expressed interest in buying into BP outlets in a number of countries, including Tanzania. What do you make out of this news, and who else could be looking into buying into BP?
KenKobil has a significant strategy to expand into the regional markets. A while back, they bought, I think, 9 or 11 petrol stations in Burundi. And the reason for this is basically what inside information tells me is that they're pegging the expansion on the Ugandan oil industry, basically position themselves to be a powerhouse in terms of how the oil industry is actually going to be determined. Okay, I know not yet confirmed, but I know National Oil has also been expanding locally, trying to basically, expand in terms of being able to control prices and things like that, but it's yet to be confirmed. But also we're trying to look at whether Kenya Shell will actually be able to let go completely. I mean, whether, because the Ugandan oil market is actually changing the scene of how the oil industry and the energy industry in East Africa is actually going to be played.